Welcome to Zach's Traders Cafe, where I'm joined by Zaf Karim, who's CEO at Legendary Investments. How are you today, Zaf?
I'm extremely well. How are you?
I'm very well. We've been here many times before discussing Legendary. Just a quick overview of what Legendary is, maybe for people who are not familiar with your company.
Sure. So what Legendary does is try and provide access to opportunities which are essentially usually on the private market that other investors normally don't have access to. So, for example, ones that AIM investors would be familiar with is pre-IPO rounds, and they often don't have access to those. Others are angel investments in startup companies. They don't have access to those. Now, the angel investments at startup and the pre-IPO rounds, when they list, there's usually a massive return to be had. And your typical AIM investor doesn't have access to that, so they have to wait till the company's listed and that level of return is gone. Some actually do have access to it, but can't invest because their remit says they can only invest in listed companies. So our kind of raison d'etre is to look for the best opportunities which are unlisted, invest in them, nurture them, and then bring them to listing or trade sale. And by investing in Legendary, any investor will have exposure to that level of opportunity rather than just a listed level of opportunity.
Well, on that note, you've got a 7% stake in VirtualStock, which is a basic software, which is a logistics. How would you describe it?
So VirtualStock has developed a unique software platform, which basically allows the integration problem to be solved. The integration problem is one of legacy systems that don't talk to each other, and VirtualStock's platform allows any system to talk to any other system seamlessly. Now, the application has been used primarily in the retail sector, more recently in the health sector, and now last week or the week before, VirtualStock announced a partnership with Wincanton, which is the largest logistics company in the UK. So there, what's happening is it allows the suppliers' systems to talk directly with the distributor systems, to talk directly with the retailer systems. And that makes things a lot more efficient, both in terms of speed, cost, waste in terms of inventory waste, etc. So that's the areas VirtualStock isn't at the moment, but the application is far wider than that. Wherever there's an integration problem, potentially VirtualStock could go in and solve that.
Right, and we've heard that VirtualStock, the company, is intending to list on the NASDAQ. Presumably it'll be worth hundreds of millions of dollars, and you've got a stake in that. So far, even with all your announcements of Wincanton, Tesco, the NHS, and various others, the market appears to be giving the idea of upside the benefit of the doubt, or not the benefit of the doubt, whatever the opposite of that is. How would you value the stake that you have in there, and how would you assure people that there is actually, the market's got it wrong, let's say?
Well, the issue of valuation can be approached in a number of ways. So the most basic way, and the way we use in our accounts, is to look backwards. And that's based on historical valuation. So in our accounts, we use the most conservative policy available to us, which is to look at the last transaction that happened. So when, for example, we first invested in VirtualStock, which was October 2012, the transaction was done at a valuation of 2 million. So we valued VirtualStock in our books at 2 million. Of course, we believe there's far more potential at that point, otherwise we wouldn't be investing. But we don't use that valuation metric in our accounts. Now, when VirtualStock raised money at 25 million, again, on a historic basis, we valued it in our books at 25 million, as in the whole company, so our stake was worth whatever our stake was worth. But the investors that came in at that point, including us, because we followed our money, obviously came in because they think it's going to be worth a lot more. And most recently, when Notion came in last July at a valuation of 66 million, so that's more than 30 times the valuation we originally got in at, I can't imagine that they came in because they think it's just going to be worth 66 million. Notion are VC, and they will totally only invest in something if they think they can get a return of, at least 5, 10, 15 times. So they must believe that the potential there is to be at least 5, 10, 15 times that. So if you just take 10 times 66 million, it's 660 million. Now, we would not put that in our books until that has happened, but that's historic. The point with the market is the market seems to be valuing our stock on the basis of the historic valuations, whereas the market is supposedly a forward-looking machine, a forward-looking animal. And so if it looks forward, then it might come up with a different valuation. Back in 2016, Beaufort issued a research report which valued VirtualStock at 176 million odd. Subsequent to that, VirtualStock has signed up, amongst other smallers that we haven't announced. It signed up John Lewis, which we announced, and it signed up Wincanton most recently. After the John Lewis announcement, the Beaufort research report, which is a forward-looking thing, valued VirtualStock at 237 million. And subsequent to that, they've signed up Wincanton, or they've partnered with Wincanton to be able to provide their services to Wincanton's customers, presumably. And so if we look forward, then there's a big gap between what we use as a backward-looking accounting, very conservative valuation, which we use in our books, to what VirtualStock could actually be worth. And of course, the CEO of VirtualStock, subsequent to the Notion investment, stated that the intention of VirtualStock is to list and possibly on the NASDAQ. Now the valuations there typically are higher than those achieved on the AIM market. So it depends on what approach you're taking. If I'm sitting down with my auditors, I take a backward-looking approach. But if I'm investing in something, if I took a backward-looking approach, I'd never invest in anything.
All right, let's take the market the other way around. Let's play the devil's advocate. The market says you're 1.1 pence a share, values the company at £3 or £4 million, whatever it is. You've got this asset there which could be worth, if it's 7% of $1 billion or $800 million, it should be on a multiple of 4 or 5 or 10 times, something like that. So, so we're looking at 30 million rather than 3 million. And you buy the shares at a penny. And the only question you have then is once VirtualStock goes to market, that notional value will finally be realised. Nobody will be able to argue with it at all, whatever it is, whether it's even $500 million, being pessimistic. So the only question is, you're buying at point one, how long do you have to wait for the crystallisation of value? Well, so at least we know that it's a 1-year view, 2-year view.
Sure.
What would you say there?
So the decision for VirtualStock to list or not to list or be trade sold, because there's a number of candidates who could come in and buy it. Certainly, the listing process would depend on the board, and you'd have to speak to the board to get the answer to that. But I would expect that at a minimum it's going to be a year, 18 months. But I would expect that if I were a VC, I'd want to see a return within 5 years and probably less. So that's the kind of time frame we're looking at. VirtualStock is progressing quite quickly. Now it's signing up bigger and bigger clients. I mean, it really does have a client list to die for. So, I wouldn't be surprised if this happens in the next 18 months, but I don't expect it's going to happen in the next 6 months. I'd be surprised if it doesn't happen in the next 3-4 years.
Okay, and just finishing off with the other news, your other, not just a one-trick pony, your news regarding New Zealand and the banking license there. Obviously, that could also be a game changer in terms of valuation and market perception. Just run us through that.
Sure. So we look for opportunities at the very early stage. And I known someone, been working with them on various things for the last 2 or 3 years. And they happened to be in New Zealand, and one of the things they said was you should look at the New Zealand market, because, and I did, and essentially the New Zealand market, New Zealand is a first world country in every respect, infrastructure, financial regulation, etc., etc.
Even rugby.
Even rugby, certainly a first world nation. And but what we found, much to my surprise, the actual financial products that are available in New Zealand are nowhere near as evolved as are available internationally. So there's an opportunity there to set up a banking services platform and apply the knowledge that we have at Legendary and the partners that Legendary has set this up with, to bring international products or international ways of doing business to the New Zealand financial sector. And If we're successful in that, this could be very valuable very quickly. So Legendary has an 11% stake, 12% stake initially, but the seed funders, after the progress that was made up to about November last year, they converted their essentially debt into equity at a valuation of $10 million US. Now Legendary got in at a valuation which is nominal. So we made a nearly £900,000, £845,000 gain on that investment. That's not reflected in the balance sheet because that was post-balance sheet. So that would put our balance sheet at 6 million. But even that's backward looking. We can't actually commence operations until we become authorised by the New Zealand authorities. And then once we are authorised, which we're hoping will be fairly soon, our advisors have told us that they see no reason why we shouldn't get authorised. Everything's in order, and etc. We'll be subject to regulation by overseen by the New Zealand Reserve Bank. But then IBS will have the ability to do essentially, all wholesale type banking operations. It won't be able to have a retail branch and take retail deposits, but that's not what it wants to do. It wants to bring sophisticated financial products to the New Zealand market, to high net worths and SMEs. People say, well, why New Zealand? Well, New Zealand is a 200 billion economy. Its GDP per head is about the same as the UK. But the key thing is there that the financial products available there are not as developed as here, and we can take them there. If we're able to do that, this could be very lucrative. Some of the deals that we're already scoping out are measured in the hundreds of millions of dollars. Now, but from a banking standpoint, from a financial services standpoint, are able to execute one deal that's worth several $100 million, and we make a 1% turn on that, well, that's more than the current market cap of Legendary. So if that works, it could be very lucrative. If it doesn't work, we got in that nominal value. That's, a pretty good bet.
Okay, we'll see how that goes. Zaf Karim, CEO at Legendary Investments, thank you very much indeed.
Thank you.